All right, ladies and gentlemen, welcome back to the channel. Welcome to the live stream this morning. Running a little bit late this morning. I'm trying to do these at about 9 o'clock Central. Is that Eastern time? Eastern time on the East Coast, yeah. However, we're here now. We're going now. This is very exciting. I had a little bit of trouble sleeping last night because of what's going on with the stable coins, and I'm going to be talking about it a little bit later. I'm going to be showing you exactly what this protocol is, how does it work. It's essentially the Powercity protocol. I'm going to show you how it works, the whole 9 yards, and it is absolutely an incredible protocol. But before we get there, we're going to go into some news. I think the news segment's going to be a little bit shorter today, so we're going to go into that. Basically, we're going to look at a bit of the attack that's still occurring in crypto. When you are in this space and you're paying attention to the news and the articles that get written, it's very fascinating. You can kind of pick up the narrative. You can kind of see the manipulation that exists, particularly if you are really into the tech side and you're following a lot of the developments that's happening, you're following the technology. You can oftentimes see how things get twisted or mischaracterized. For example, I'm going to show you a very obvious example of that in today's video, ladies and gentlemen. As you come on in, do me a favor and smash that like button. Say good morning. Let's get a conversation going. Let's keep it lively. Love to talk to you guys. Love to interact with you. This is one of the things that I love about lives. Two things I like about lives. You don't have to edit them, and I get to interact with you all. That's what I like about lives. And I can go live a lot quicker than I can get an actual video up. By the time I record a video this morning, it's going to be sometime this afternoon by the time I edit it. And that's even if it's an 8, 9, 10-minute video, 15-minute video. By the time I edit it and get it out to you, it's going to be hours and hours later. So we get to start our day together, start our morning together, and get to pay attention to what's happening in this space, learn a little bit about some of the returns. You all know in crypto, I am bullish. Nothing in this video should be considered financial advice ever. I will say that until I'm blue in the face, I guess. I'm very biased on crypto long term. Don't follow anything I say as a recommendation. That would be a bad idea. You will see a lot of the decisions that I'm making for myself and my family, and I'm optimistic that they are going to do really well long term. But I have no official qualifications to make a recommendation for you, your family, elsewhere. And I should say this as well. Ladies and gentlemen, my finances are pretty secure outside of crypto. Like, I have done okay for my family and myself. So if all of crypto went to hell in a handbasket, it would not affect my overall quality of life. So that puts me in a place where I'm able to take risks that others can't. I had a real world friend who watches my channel. He said, I could never do what you do. Take the kind of risk that you take with your, money. And I said, yeah, but first thing I asked him, I said, are you out of debt? And he said, no. He goes, but my wife freaks if I try to spend $500 on something. And even if it is an investment, we can lose it. And I said, well, get out of debt, and then would she care as much? And he was like, well, probably not. And I said, well, there's one tip for you. Now I know everybody's not out of debt, but the name of the game is we're all in different places, and we have to make decisions based on our current circumstances in our life at this time. All right, let's go ahead and get started really quickly. We're going to go ahead and start by looking at Bitcoin 67,000 going back up. Here we go. This is becoming a very interesting support zone. I think later on it's going to be, I'm sorry, resistance. I think later on it's going to be support, but currently it's resistance. I think it's going to take longer, and you'll see in one of the news stories, it's going to take us a little bit longer than many of us want to break through this level, because I, like everyone else, am ready to see us break 70,000 and beyond. And if you agree, if you want to see Bitcoin above 70,000, do me a favor and smash that like button. As Mtron says, let's pump the likes. All right, so let's go ahead and get into this. By the way, if you want to follow my copy trading journey, I'm up about $200 today. It is insane. I'll put a link in the description. You can subscribe to that, and I absolutely appreciate it. Let's talk about this right here. We're going to be talking about government regulations today because it's an ongoing theme that keeps showing up in the news stories. But if government was going to regulate something, this is the stuff they need to be regulating. These flash crashes, these pauses that's happening on mainstream exchanges, the SEC doesn't need to sue Coinbase. What they need to do is they need to give oversight on their exchange operations. It is inexcusable that we have these crazy outages and crazy flash crashes that occur Now, obviously, yesterday we did have a bit of a flash crash in the overall market. That did happen. But it's crazy that we have these crashes occurring on exchanges and, nothing else. No one's like, there's no regulatory agency talking about that. They're all too busy arguing about whether we should be able to use crypto or not, and whether, certain companies should be illegal or not. That's absolute garbage. All my Bitcoin ETFs up 7 to 10% today. Good stuff, Mind of Sean. Good stuff. Oh God, I hate the ETFs. Let me just say it. I mean, I love what they do for crypto, but I hate the ETFs. All right, let's go over here real quick. Bitcoin rally may slow. This is what I was talking about as the order book imbalances hint at profit taking. The gap between liquidity on the ask and bid sides of the order book within 2% of the market price has widened to nearly 5 times as usual value. The gap between liquidity on the ask and the bid side within 2% of the market price has widened to nearly $100 million, according to data tracked by Kaiko. The persistent gap likely stems from investors taking profits at record high prices and market maker positioning. So here's what we're going to start seeing. A lot of traders, even on YouTube, have done a lot of technical analysis in the past when it came to Bitcoin prices, Ethereum prices, etc. But the truth is, and many of them know this, but the truth is, it's much more difficult to do technical analysis historically on something like Bitcoin and or crypto in general compared to typical markets because it's been so erratic. Part of the reason it's been erratic is because so many people up to this point have been in Bitcoin for the underlying use case. The amount of long-term wallets that don't move in when it comes to Bitcoin, they don't ever buy, they don't ever sell, they just hold the Bitcoin because they believe in the technology long term. It's staggering how many people just hold Bitcoin. Maybe they add to the wallet, maybe they don't. There's so many wallets out there, so much USD value in wallets, and it's just not moving because people are holding this stuff for the very long term. That sort of thing, that dynamic, and some of the crazy speculative dynamic from the retail traders is what has always historically made technical analysis a little bit of a challenge. I think we're going to start seeing technical analysis in the future. Those of you who like technical analysis in your trading, I personally think it's a self-fulfilling prophecy, so therefore it does have some merit, but I don't love it. But those of you who really like technical analysis, I think we're going to start seeing as ETFs come into play, as people start to treat it more like a traditional financial instrument because of the ETFs, I think we're going to see things like sorry, wrong screen. We're going to see things like support and resistance get respected better. We're going to start seeing a lot more of the trend line development that people really want to see. And if you've been watching technical analysis on crypto for a long time, and that's where you learned about technical analysis, then you might think it's actually quite good on crypto. But if you've learned technical analysis in the traditional markets, you'll know that it actually has historically sucked ass on crypto. But it actually I think it's gonna start proving to be a little bit more accurate because of the self-fulfilling prophecy nature that traditional markets tend to use when it comes to crypto. That's my personal opinion. Let me know if you agree or disagree. Do you think technical analysis is gonna become a little bit more important in the future? All right, next up, I'm gonna go through this article here, Why Crypto Just Won't Die, because I think that I'm just going to go through it. I want to give some commentary on this article. It's not a very long article. Why crypto just won't die. Bitcoin's biggest weakness may be its greatest strength. This is an article that really sort of leans both ways on the issues, and it's actually well written. I didn't like it at first, but when you get through it, you realize it's pretty well written. Can someone remind crypto that it's supposed to be dead? The digital asset market, widely written off as a bubble that burst 2 years ago, is having one of its wildest rallies ever. What's interesting, Mike, when I read this, I thought, who wrote it off? Who actually, like this author, right, assumes to think that the bull market, which was just a repetition of the previous bull market, and the previous bull market, I mean, there's been a solid halvening cycle and a bull and bear market cycle occurring almost since the beginning of Bitcoin, since the halving was introduced. So it's interesting when you see stuff like this, it makes you think this guy, obviously, this is someone who doesn't know anything about crypto, and he started doing some research on this article, for this article. Like most of you know more than this author does. Most of you who've been in Bitcoin since before 2020 probably definitely know more than this author does. And you can kind of see that a lot when you start reading about crypto. The price of Bitcoin, the original cryptocurrency, has risen nearly 60% in the past month. This morning, it reached a new all-time high of about 69,000, breaking the previous record set in November of 2021. The rest of the crypto market isn't far behind. This feels impossible. Again, to who? It doesn't feel impossible to you and me. We've been waiting for it. We've been expecting it, right? Li Chang, where are you? Show your face, sir. No, thank you. I actually haven't been on camera since I started this channel in 2017. Don't plan to start today. 15 years into its existence, the technology has yet to, I said 2017. Did I say 15? 2017. The 15 years into its existence, the technology has yet to demonstrate any serious use case. Its value surged during the pandemic when investors with easy access to money and plenty of idle time fueled many of speculative frenzy. Or we were in a typical bull market cycle, as we have every cycle. Okay, next. The Federal Reserve began raising interest rates and the crypto market abruptly tanked. Sam Bankman-Fried, whose face used to gaze all of full-page New Yorker ads, now awaits sentencing for fraud from a Brooklyn jail. Celebrities who shamelessly haunt crypto exchanges and NFT collections have gone quiet, in some cases under legal duress. This is so misleading. Part of the reason celebrities have gone quiet is because those same companies are not offering to pay celebrities. I assure you, in a bear market, there's a lot less crypto companies willing to pay for promotion. I can tell you that as a YouTuber. So with that being said, that's probably the real reason. I mean, celebrities are like prostitutes. You pay them to talk about it. So, I mean, they're worse than YouTubers in that way. The 2022 Super Bowl felt like one long crypto ad because we were in a bull market. By this year's game, the world had moved on to other speculative fads, generative AI, Taylor Swift, and crypto seemed like just another fad relic of the zero interest rate era. And yet, even after innumerable crypto scandals and lawsuits, the prices of Bitcoin, Ethereum, and other major cryptocurrencies never fell below late 2020 levels. They had been steadily regaining their value long before the recent super spike. The fact that no one can agree on what crypto is, hasn't kept the market capitalization. What crypto is even for? See, again, most of us know what crypto is for. The fact that no one can agree on what crypto is even for. And see, the problem with articles like this is not me and you. It's how it's shaping popular opinion of people who read this. So if you read this and you don't realize this article is a little bit full of crap, then what you got to realize is that the demographic of the Atlantic is older and slightly above average intelligence. And these people are reading this and they are beginning to think this is shaping their opinion as, oh, this should be a fad. This is a no-brainer. Why are people paying attention to this? That's the problem with content like this. The fact that no one can agree on what crypto is even for hasn't kept the market capitalization of all cryptocurrencies from surpassing 2.5 trillion. Indeed, its utter pointlessness may have even helped. Someone tell Michael Saylors that Bitcoin's pointless. The lack of consensus about crypto's purpose might be the very reason it never dies. No, it might be because it's on a public blockchain and it's never going to actually die anyway. The present surge has two immediate causes. The first is the Securities and Exchange Commission's reluctant decision to begin approving Bitcoin's exchange-traded funds, which has opened the sector to traditional financial institutions and given it a new sheen of legitimacy. Because it is legitimate, moron. So here's the thing. You read stuff like this. The first is the Securities and Exchange Commission's reluctant decision to begin approving. Reluctant decision, you can argue whether they should or shouldn't. I want to ask the author, so what was behind their reluctant decision? Why did they decide to do it even though they were reluctant to, if that was the case? Like, I don't even think the author can articulate that. So it's fascinating to watch him, I guess, opine, to use a word, on this topic when it's clear he's uncertain, unsure. But again, to the person who doesn't know any better, he's definitely manipulating their mind. This happens to us constantly in the world, ladies and gentlemen. The whole world's a stage, and this could be no greater proof. The second is that Bitcoin is approaching one of its periodic halvings. No kidding, that's the primary one. Moments programmed into its source code when the rate of new Bitcoin production gets cut by half, which reliably causes demand to jump. But neither of these factors explains the deeper mystery. How is crypto even a thing? That's the question. How is crypto even a thing? Crypto staying power is in part a consequence of its design. No, not in part. That is all the consequence. Crypto staying power is in part a consequence of its design. No, that's not in part. That is all. In fact, the author, I challenge the author, he or she could not prove any other factor other than the design of a public blockchain that you could credit the rise of crypto for. Like that's everything, not in part, that's everything. No central bank was needed to verify who owns how much Bitcoin, thanks to cryptography and some clever game theory. The network itself could keep track of that. Technologically, it has no single point of failure. Exactly. Every computer in the network maintains a complete record of every transaction, which means no single entity can shut it off. This was a huge part of Bitcoin's early appeal. It was decentralized, but could still be trusted as a store of value. But to what end? What was it for? You just said it. Over the years, the number of answers have been any number of answers have been offered. An early one was crime. Really? See, this is annoying. When? When was there an answer offered that was crime? That's why we should that's why cryptocurrency is incredible. The dollar, the US dollar is used far more than any cryptocurrency for crime, as we discussed yesterday when the live stream got jacked up on us. The US dollar is used far more in money laundering, far more in any scam or scheme that's out there. But yet, we don't say the dollar was created primarily for crime. Ladies and gentlemen, this is crypto propaganda if it ever existed. A currency beyond the reach of government whose every transaction was anonymous? No, beyond the censorship of government. Governments that create bodies like the SEC that attack innocent investors and innocent businesses while making way and being chummy with scammers like Sam Bankman-Fried and FTX, taking personal meetings while being chummy with people like Bernie Madoff. So yes, average citizens want a way to be able to transact in crypto in a currency that does not require any government interference or manipulation. A currency beyond the reach of government whose every transaction was anonymous seemed to lend itself to illegal businesses, so they always say to everyone who wants privacy. Another early dream for Bitcoin was that it would replace the US dollar as the world's global reserve currency. Correct? It's currently doing that, as we now have no less than 3 countries that have admitted to holding Bitcoin as part of their central reserves. And at the same time, we have 2 very large countries that refuse to sell the Bitcoin they've confiscated, i.e. the US and the UK, have millions and millions of dollars in Bitcoin that they have refused to sell. And I think that's intentional. I think it's literally a secret store of value just in case for them. So don't sell it, hold on to it, just in case. In theory, Bitcoin scarcity and its total supply, I can't even pronounce that, approaches 21 million, makes it inflation-proof, unlike a paper currency printed by central bankers. As cryptocurrency proliferated and mutated over the years, so did the justifications for their existence. Newer non-Bitcoin digital assets built with more technology features promise to be more than just a form of money. Crypto would be a boon for the developing world by making it easier and cheaper to send cross-border payments to relatives back home. That is correct, 100%. Crypto would be the basis of something called Web3, a new decentralized version of the internet built on the blockchain and immune to dominance by big tech oligarchs. Decentralized autonomous organizations, or DAOs, financed by crypto would enable a new form of collective action to benefit mankind. That's the hope. All of these theories had obvious flaws. Conducting business on a public database that logs every transaction in perpetuity turns out not to be the smartest way to commit crimes. No kidding. That's absolutely correct. With its wild price fluctuations, crypto looks nothing like currency. In El Salvador, where Bitcoin was adopted as a legal tender in 2021, few people actually use it. This is
this is interesting. In El Salvador, few people actually use it for a store of value, but it's been proven that people are actually buying it and storing it. I mean, few people are using it as currency, but people are buying it and storing it. So notice how that's a little bit of a misrepresentation there. They make out like citizens are, if you read this on face value, you may think citizens are not using it at all, and that's just simply not correct. And uh, crypto has proven an unreliable inflation hedge. That is true so far. Crypto remittances are useless if they can't be redeemed for local currency, of course, but this is under the assumption that you can't redeem it for local currency. I mean, you can redeem crypto for local currency in the US, for God's sakes. So, of course, you can still do it in other places in the world as well, and arguably much easier. Web3 is clunky and confusing and has done nothing to undermine big tech. Um, in some areas, this is actually a little bit debatable. I think that is the strongest argument. I think the tech aspect, as far as being able to create a decentralized internet type concept, we are still very far away from that. But in some areas, there's definitely been some strides. DAOs are neither decentralized nor autonomous if they are even organizations and so on. Well, where's the so on? See, and so on what? I agree with this. We have yet to see DAOs pull off to be a truly decentralized, truly autonomous network. That has not happened anywhere yet in crypto. Even when you look at a DAO that looks like it's a really strong DAO, the creators and founders are essentially in control because they hold the most tokens. And that's the best version of DAOs that we actually have. But progress is being made on DAO technology and how people vote. That is still happening. There are people actively working on this. And it will be interesting to see if we can pull this off. I think in some ways, we're going to need to actually make DAOs a thing long term. Let me know your thoughts on this article so far. We're just about to the end. The trouble is that convincingly debunking all the pro crypto rationales at the same time is impossible. Each rebuttal itself can be rebutted, and by the time you finally wrap your head around why the technological complexity of interacting with blockchain is inevitably creates demand for the very intermediaries crypto is supposed to obviate, you have forgotten whether you believe the hype around zero knowledge or layer two blockchain. See, this is a little bit of gaslighting. Like this is just, a confusing statement that's not getting to the point. The reality is, if you believe that Bitcoin's a store of value and you fundamentally believe it because it's an immutable blockchain and it's trustless, if you absolutely believe that, there's no rebutting it. I mean, you can attempt to rebut it, but there is no rebutting it. There are absolute problems with creation of government currencies. That is, they can get inflated forever. They can be manipulated, period. Bitcoin can't. Has it currently made the best currency? No. Could it potentially in the long run? Absolutely. Will it always and forever be a way to exchange some form of value between one citizen and another that could not be stopped by any government entity or law enforcement if those two entities wanted to anyway? Yes. It is the only form of currency that all governments and law enforcement can do is threaten you with penalty. They can't freeze accounts, they can't confiscate your funds at all as long as you transact with them in a decentralized way on a blockchain. That is incredible. Crypto's profusion of half-baked rationales, long a source of derision and mockery, turns out to be perhaps its most powerful secret weapon. Different constituencies have different reasons for buying in, which makes the argument for crypto resilient. It too has no single point of failure. People trying to explain crypto's staying power, often compared to other assets like gold, diamond, or fine art, have little intrinsic value apart from their collective societal delusion. But gold, diamonds, and fine art are status symbols. Well, first of all, gold bars are not status symbols. Gold jewelry is. That's very different. Crypto is not, which is why its owners sometimes trade it for Lamborghinis and yachts, which are. Crypto is built on a different sort of collective delusion that whatever its price may be today, someone will be willing to pay for it more tomorrow. That's inaccurate. That statement there is the speculative statement for crypto. Most people are buying crypto because most people are holding it for a store of value, believe that the price may only go up because of manipulation of fiat or paper currency in the long run. Which, according to the author, all of this is turning out to be not much of a delusion at all. That's the interesting part about this. When I read the last sentence, I'm like, So did I just watch what was that movie? I See Dead People, where you like realize the whole movie at the end. You're like, wait, what just happened? Like I read the article and I get to the last sentence and I'm like, what just happened? So I almost need to research the author. Are they pro crypto or not? Just Gilad Edelman. I don't know who they are. Um, Very interesting article. There's a twist at the end. What does the author actually think? Um, anyway, I saw this tweet. It was very fascinating. I want to touch on it. Rizzo, I think this guy's a Bitcoin maximalist. Bitcoin will be adopted like gunpowder. If you don't own it, you'll be its victim. And he said here, true at 40,000, true today. Bitcoin adoption will not be optional. I think we're kind of watching that happen, play out in real time. Before the rest of the world admits it, adoption will already be here, ladies and gentlemen. Shuttered crypto exchange. Now we get into some craziness. This article's full of garbage. This is absolute propaganda. Shuttered crypto exchange Shapeshift settles illegal securities charges with the SEC. Founded in 2014 by Erik Voorhees, Shapeshift shifted to a decentralized non-custodial model in 2018. I'm not going to go through this article, but basically several times the guy says that Shapeshift is now essentially defunct or whatever. And it's ridiculous. He doesn't understand what he's saying. He probably never knew about Shapeshift until he decided to write this article. Erik Voorhees is one of the original real OGs in crypto. And this guy has been through a lot. So they created an exchange called Shapeshift. This was more of a centralized exchange, very similar to something like ChangeNow.network, for example. And when he created the exchange, they were obviously the intermediary. They would hold cryptocurrency and they would basically allow people to trade, say, Bitcoin for Ethereum, etc., cross-chain. Because they held the cryptocurrency, it made it ran into regulatory issues. All of a sudden, when they started saying, "Oh, crypto might be money, crypto might be a security," all of a sudden it ran into regulatory issues. Shapeshift also never ever required KYC initially. And Erik Voorhees, all of a sudden, in 2000 and I don't know when it was, 16, 17, somewhere in there, they started doing KYC. And this guy took a lot of hate. No one understood why suddenly they were requiring KYC. This is a little bit of a history lesson for those of you that are new to crypto. And I mean, I remember when this happened, and I remember reading up on it thinking, wow, I cannot believe they're requiring, because they were one of the first, like, quote unquote, exchanges to start requiring KYC. And it seemed like it didn't make any sense. Well, now we know. He did an interview a year or two ago on Naomi Brockwell's YouTube channel, and he talked about that they got something called a yellow canary letter. If you don't know what a yellow canary letter is, you should look it up because it sounds like total conspiracy theory. Do you find out it's actually real? These yellow canary letters come from the government and three-letter government agencies. And it's basically where software companies get these letters. And the reason it's called Yellow Canary is because the software companies are not allowed to discuss with their users why they're having to make changes or even notify them that they are getting this government action known as a Yellow Canary letter. This Yellow Canary letters basically means that they're getting investigated by the government, and there's certain things they need to do or not do. In Shapeshift's case, they were required to start getting KYC AML from their customers. So they had to require this from their customers. And they couldn't discuss it. So they had to take all this backlash, all this heat. They couldn't say anything about it. The reason it was called a Yellow Canary letter, by the way, is because there was a secret way for a while that some tech companies were allowing their user base to know, and they would basically put like an icon of a yellow canary somewhere on the website, kind of like an Easter egg, and people would find it and would realize, oh, they're under investigation by the government for whatever reason. So in this case, the government came after Shapeshift. They looked into them, and Shapeshift basically just said, okay, fine, we'll go decentralized. So this is when the article, the author is like, oh, they went defunct. No, they didn't go defunct. The business just went out of business and they went full decentralized. You can actually see Shapeshift still exists today. This is their Twitter. They no longer update their Twitter, but if you come here, you can see there's a website here that absolutely still works to this day. And you can come here and you can swap out, etc. I don't want that to fully load, but you can see that it's still in existence to this day. Erik Voorhees, by the way, is the guy, and this was his response. I guess it was yesterday. He said Fox, meaning they created their own token called the Fox token. Fox is not a security. and nothing in the SEC settlement suggests otherwise. Shapeshift DAO and Shapeshift.com are unaffected. They are open source, permissionless, and private. That is a pretty bad A move. He could have just shut down the business. He didn't shut it down. It's no longer a profitable business for him, but he just simply said, forget it. It's open source, it's permissionless, it's private. What are you going to do about that? And Shapeshift is still out there. You won't hear a lot about it because there's no company pumping it. No one is promoting it. Erik Voorhees is someone, he doesn't tweet a ton, but this guy is hardcore. I mean, I got his link in the description of this video. Follow him on X or on Twitter because this guy's just, I mean, he's the real deal. If you look at some of the stuff he says down here, November 1st, 2022, he said, let's remember that Elon Musk charging $8 for premium Twitter experience means Twitter becomes a product again instead of you. And if $8 is too much, you're free to remain as a product. I mean, the guy's hardcore. Watch this. Build a website that lets consenting adults buy recreational drugs. He's talking about something called Silk Road. You can look it up. Equals 2 life sentences plus 15 years. Build a website that steals $10 billion from innocent people. He's talking about FTX. Equals hugs with politicians and celebrity endorsements. I mean, this guy calls out the hypocrisy all the time. Look right here. Back in 2017, he said this. Breaking news, JP Morgan CEO Jamie Dimon says Bitcoin is a fraud that will eventually blow up. That was in 2017. Jamie Dimon, it hasn't happened yet. Erik Voorhees responded, my memory is failing. Was it Bitcoin or was it JP Morgan that was bailed out by the US government? I mean, this guy is, I mean, it's just, he's hardcore. He's a real deal. He's not someone who was just in it for the money. He was in it to make money in the process if he could, but he was here first because he believed in the technology and he believed what this could do. I definitely recommend that you follow Erik Voorhees for sure. All right. We've covered the news. There's good guys, there's bad guys. Elizabeth Warren, bad person. News, propaganda, everywhere. Let's get into this. So, ladies and gentlemen, we have something incredible taking place. Last night, Earn Protocol was launched. This is absolutely bonkers. It's paying an APR right now 419% in their Earn token. If you don't know what Earn Protocol is, if you've been following me, then you may be familiar with Liquid Loans. Earn Protocol is a fork, essentially, of Liquid Loans. The only difference is on Liquid Loans, people put up their PLS token, their Pulse token, and they take loans out in USDL, which is the US stablecoin for Liquid Loans. Here, people put up their Pulse X token from the Pulse X exchange. Here, what they're doing is they are taking out a loan, taking out collateral in the form of PXDC. I guess that's the digital or PulseX digital currency. I'm not sure what that stands for, but essentially it's a stable coin. Right now, the APR is sky high. All these protocols have high APR, but there's some significant difference in the PDX token as well as the loan token. I'm sorry, the PDX, the Earn token and the loan token. Some significant differences there, and I want to talk about them. By the way, I want to get this out of the way. People on all these protocols, when you have competing protocols or similar protocols, people want to get tribalistic and liquid loans, earn, good guys, bad guys. None of these guys are bad guys. None of them are good guys. They just are. Right now, I, as an investor, am going to where I think I can get some of the best yield. I'm currently getting 418% APR uncompounded. If you compound that, it's going to get crazy. Now, this APR will go down. Last time when it launched, someone said it was at 5,000%. When I got in, it was at 900% many hours ago. Now it's at 418%. By tomorrow, it'll probably be 200% or 300%, and it will start going down slowly. But Liquid Loans is still getting over 100% APR in their stability pool. So either way, this is freaking phenomenal. There should be links. Mind of trying to ask for links. There's links in the description down below, and even details on how to get into this. But here's the thing: the Earn token is currently right now at $2.39. So you see this pump, just like anything else. Basically, the only way to get Earn token, there was no sacrifice phase like there was for the loan token. The only way to get Earn token is to be able to essentially mine it. That was the primary way you could get it. And then, so people were trying to get the earn token because they wanted to stake it or whatever. So everybody's trying to get the earn token. Maybe they were trying to get it because they knew the price would pump down here. They decided to buy in thinking it was going to pump, and it did. But eventually, the supply is going to be ever increasing over time, so expect the price to drop. However, here's what's interesting about the earn token. I believe the emission rate is different on the earn token, and because there was never a sacrifice phase of the earn token, I think that's going to cause the average price to stay much, much higher, and there's going to be much lower overall supply for the earn token. Now, I'm not certain if the earn token has the same halvening effect as the loan token. The loan token emission slows down every single second, essentially, which equals to like a 50% halvening or decrease in the emission rate every year. I'm not certain if earn token does the same thing. Here's what's incredible about this. We now have two digital stablecoins that are decentralized in the same ecosystem. Why is this important? Well, at any point in time, you can go to liquid loans and you can, if you want to, you can redeem. Let's just say their USDL loses peg. Let's say it goes to 90 cents. At any point in time, you can use the redemption function and you can redeem for $1 worth at the current market value. Even if it's only valued at 90 cents on the market, you can use a redeem function and you can get $1 worth of pulse out at any time. That helps maintain the peg. Same thing's going to happen here in about 14 days because it takes 14 days before they allow, I think, redemptions of any kind. So when they allow redemptions, when the earn token is down below peg, so it's 5 or 10% down, at any point in time, you can redeem for $1 of the Pulse X token. However, whenever you do the redemption, there's like a 1 or 1.2% fee or 1.5% fee or whatever that goes to the protocol. That fee allows the loan token to fluctuate at like 98 cents, for example. Well, and over time, gets a little bit more stable. Well, I think having two, and no one has talked about this, but having two USD stablecoins, anytime one of them is below peg, all you have to, both of them have a mechanism to keep them really close to $1. So anytime you see that the earn token is at $1 or above, and you notice the liquid loans token is down below, you can come to something like Pietas, I can't even say it right. And you can simply swap for USDL to PXD or PXD to USDL, whichever is higher. And you're literally going to make that 1% immediately. And the only fee you're going to pay is less than a penny or 2 pennies or whatever of gas. That's it. So this is going to allow, this is incredible because many of you know, for me, my favorite function is not that you can take a loan essentially for free, an interest-free loan. For me, it's the digital stablecoins that are not controlled by the US government or any other entity. So now this mechanism, having two stablecoins to be able to swap between if one is off by even 1% and only pay gas fees, I mean, I don't know anywhere else in crypto you can do this. Imagine your entire balance being able to swap it from one stable coin to another and turn 1%. And you can do that as many times as you spot that deficiency. That's incredible. And the only fee you're going to pay is gas from one stable to the other. There's times like right now, for example, the PXD was above peg. Is it now? Nope, it's not. If you wanted to, you can wait. It's been running a little bit above peg because people wanted to come into the stability pool to get this high earnings. So it puts a lot of buy pressure on the token. Well, you could sit and wait when it's 1-2% above. This is a 5-minute chart, so it's been above. If you really wanted to, you could sit here and buy you some liquid loans, and whenever this thing goes up, or buy this if you wanted to, whenever it's above by 1 or 2%, if you think that's going to continue to happen, just decide, oh, we're 1% above, I want to sell for liquid loans. Then when it comes back down, switch back. When it goes back up, sell for liquid loans. Like you could theoretically do that. And as long as it stays above peg like that, you're going to make money. Long term, I think it's going to be true the other way around. When you see one go down, you want to buy that one. You see it go down 1%, 2%, you want to buy that one and wait for it to get pushed back up by the protocol. And this is going to do phenomenal things for the overall ecosystem. So how in the world do you get into the Earn protocol? Well, if assuming you already have Bitcoin, you already have MetaMask, or you have Ethereum, you have MetaMask or Binance or whatever, you need to, first thing you need to do is you need to come over to something like changenow.network. That's the affiliate link, by the way, for ChangeNow, changenow.network. Links in the description to the steps. You need to swap your Bitcoin for, or your ETH for something like PLS. It's not, let me see, try to reframe. It's not coming up. There we go. Swap it for PLS. And once you do that, then you're going to be able to take that PLS. You're going to be able to come over to something like this Piatis or whatever. You'll swap your PLS for the PXD token. And then you'll come to the, again, all the links are in the description. Then you come to the Earn Protocol. They're not affiliate links, by the way. There's no, to my knowledge, there's no affiliate links for this. It's just the process of how I got in. And then you come over to the vault and you would want to, this is how you claim. You want to, I think it says the first time you have to connect your wallet, and then I think it says add or whatever, or adjust. And when you adjust, you just click on this button. You click max, and then it's going to add that PXD to your deposit. And when you want, you just claim your PLS and or earn. Mostly what you're going to get is earn. Just click claim, and then go back to the same exchange. Come over here, put your earn in, swap your earn to your PXDC, go back to the protocol, and then stake it back in. And literally, I mean, you because transactions are so cheap, it is so easy. It is so easy. All right, let me go through a little bit of comments here. There's not been a mind to try and talk about earlier. At least YouTubers do some due diligence. Celebrities have no clue what they're talking about, in my opinion. I think some of them do. I think there's a few celebrities, but yeah, I get what you're saying. People are willing to do whatever. Celebrities are far more likely just to do it because they get paid, or they have an agent bring something to them. Big Smoke says people keep sleeping on Pulse Chain. Tell me where you can get at least 100% on stables. It's insane. It's absolutely insane. People don't realize if you do 100% APR, that's the rate you're going to earn without compounding. If you compound your earnings once a day, you will, at 100% APR, you will almost triple your entire bag. To be very honest with you, there's only a couple things that keep me from going all in with my DeFi portfolio, because I seriously considered cashing out about $30,000 and putting it in here. Why? Because being able to triple that or even double it, and even if it slows down and I don't end up tripling it by the end of the year, where else am I going to be able to make these kind of earnings, cash flow earnings on stablecoins? It's absurd. There's two things that stop me. I'll share this with you. One is both protocols are still somewhat new, so that's always one issue. The other thing, and I'll share with you my long-term plans for these protocols. Both protocols are relatively new. The other one, both of them require on a pricing oracle designed by Liquid Loans. Oracles are incredibly complex. And if that oracle ever failed, that would be a major point of failure. I'm not a tech guy. I'm not saying it is going to fail or will fail. What I'm telling you is I don't know enough to know. So therefore, I'm not willing to completely bet the farm here. I am going to be adding funds from some of my other passive incomes. I'm going to be adding funds. I plan to add another $1,000 or $2,000 this month, and I'll probably continue to add it here as long as these APR stays high. Now, long term, my plan is for, you all know, I talk about harvesting profits in bull markets in US stablecoins. I think a significant percentage of that I'm going to spread out both between this stability pool and the stability pool on Liquid Loans long term, because I think eventually the APRs are going to be very similar. So that's what I'm going to do long term. And long term, I'm probably going to start staking Earn and the loan token eventually to earn more Pulse and Pulse X, because I'm telling you, people are sleeping on this thing. I mean, they are absolutely sleeping on it. I mean, the amount of people who manage money, I don't mean like investment firms, I mean like individuals who manage money for other humans. And you manage, $1 million, $5 million, $10 million. There's a bunch of people who do this, private money managers. Those people have no idea what they can do with their portfolio. Even if they took 10% of it and put it in these two protocols, say they manage $10 million and they put $1 million in each protocol combined or total,
their returns on their overall portfolio would absolutely be boosted by a significant amount, and it still allows them to hedge a weakness in the event there was a point of failure, which there may or may never be an absolute point of failure. So this is incredible stuff, ladies and gentlemen. It's absolutely incredible. I get you. I got a couple. I get you. I got a couple of free earn tokens, so I'll stake them. I'll add rewards from other farms to avoid risk. Yeah, absolutely, Big Smoke. Staking them right now is not going to earn you anything. Like if you stake them into staking, it's not going to earn anything, I don't think, because redemptions, when these protocols launch, there's no redemptions, which is where they make their money. There's no redemptions, I don't think, until 14 days. So you may not get much if you put the earn in there now. You can, or you can sell it and go back into PXDC. Whatever you want. That's the thing. It's our funds. By the way, this APR will go down for two reasons. More people come into the pool, so our percent of the pool will go down. That will cause the APR to go down. As well as, and I almost don't even want to talk about this stuff on my channel. I almost don't want to create awareness, because as more of you get in, like it hurts my overall earnings. And I know for a fact there are YouTubers not talking about this and there are people who don't want me to talk about it. They've told me that, hey, don't talk about it. And I'll be honest with you, it's tempting not to. Like, it's tempting not to. And I haven't actually done an exclusive full tutorial on either one of these platforms yet. And to be transparent, that's probably the reason. Because as more people comes in, our overall earnings go down. And I don't want my earnings to go down. These are amazing earnings for what they are. If there's no token, well, there's very limited token risk, price movement. It's a stable coin. So yeah, it's crazy. I want to keep the earnings up. But as more people come in and our percent of the pool goes down, this APR will go down. The other thing, as the earn token price goes down, then also, since we're earning in the earn token, as the earn token price goes down, then of course our APR will go down. I don't expect the earn token price to go down as far as the loan token, because it doesn't have the same kind of supply at all. And they're both serving very similar sized markets at the end of the day. Ladies and gentlemen, this has been a good time. I enjoy doing these live streams. Thank you so much for being here. Before you leave, do me a favor and smash that like button. The world may be against crypto. The lawmakers may be against it, but I'm going to tell you what, ladies and gentlemen, long term, they will not be able to stop it. They may manipulate the price. That can happen. So you, as an investor, you have to be aware of that. But they're not going to stop this movement. They're not going to stop this technology. Remember, decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.